Tomorrow we get the producer price index, and following CPI, we have a lot of market data that is both behind us and in front of us. And in this video, I'm going to break down where I currently stand with a lot of different markets, everything from stocks and indices, of course, to commodities and currencies as well. So let's go ahead and jump into it. As we start today, I figured we could take an updated look at the overall kind of across the board market. We have the S&P 500 traded up yesterday, but kind of slightly down here this morning. But what's interesting is we're actually seeing tech specific areas a little bit more down here today. So that's why we see the NASDAQ leading the sell side. And at the same time, the Dow is actually up on the day. So we'll break down that in just a moment a little bit further based on sectors, which I think could be really interesting if you're an index trader. At the same time, we have the dollar index trading lower here recently, and we also have the euro and of course the pound loving the fact that the dollar is down, and of course gold is still chugging along, doing its thing. Despite the pullback yesterday, I think we might have seen a short-term bottom again for gold. I'll break that down in a moment and go over my recent actions on gold, and oil is actually breaking out here as well. So very interesting moves so far today. Also, if you haven't joined our Discord server, it's now free to join. There's a link down below in the description. We post free daily analysis, updates, things like that. So make sure to join if you have not already. Again, the link is down below in the description. So first things first, guys, I'm going to update you with one of my recent actions. I added size to my gold trade, which I know sounds kind of crazy. What are you talking about, Nick? You added to your long trade after the big run up? Why couldn't you have done it over here or here or here or here? Well, I'm going to break that down. CPI had an interesting kind of setup here for us, and I broke this down, but let me reiterate and remind you guys this theory here. So recently we had two very big back-to-back indicators in terms of economic data out of the US. We saw CPI on, of course, this week. We saw it actually stay stubborn and remain elevated, but last week we got jobs which were cooling down. This environment is actually very bullish, in my opinion, for gold, because what we see is jobs growth kind of deteriorating while inflation is still sticky. If people get too worried about this, they will likely continue to push gold higher. So I like the fundamental story there, and recently I added to my position on this pullback here. So you can see this blue line is where I actually added position. And if you're wondering what I'm actually trading, it is GLD. It is an ETF that tracks the price of gold. And of course I added it here. So of course my stop loss is below that market structure. Same sort of trade idea. It's going to move the same percentage wise as the spot price of gold, but I like to track the CFD or the spot price of gold and then actually just execute on the ETF. At the same time, real quick, I'll just update you on my silver position. I am also long silver, and I'll talk more about this relationship with gold and silver in just a moment. So turning now to stocks, I wanted to show you guys something very interesting. The S&P 500 is barely off of its all-time highs. Meanwhile, today we see the NASDAQ selling off rather aggressively compared to the S&P. And I want to break this down because it might be a little confusing. How come these things always move together, but then suddenly today the NASDAQ is underperforming? It's not even past the all-time highs, and S&P is kind of trading solidly above them. Let's talk about that. So here's a heat map of the S&P 500, and what you can see is this section is technology, which is a lot more red today. Now the NASDAQ has a lot more of this in it. Basically, it's more concentrated in technology, and everything else, of course, it still has a lot of other things, but it's less concentrated in these areas. Of course, the S&P 500 has more of this stuff in it, and so this area being more green today, this is everything from financials to comm services to healthcare to consumer cyclical, etc. Just wanted to point that out. That is why there is some divergence in performance today between the NASDAQ, S&P, and the Dow, which is actually green on the day. So taking a closer look at the S&P 500, I still think this thing is due for a bit more of a pullback. It's been on just a completely hot streak, and while I am still bullish personally, before I can do anything with this one, I'm waiting for a pullback. Same thing with the NASDAQ. I'd like to see this thing pull back a little bit on the higher time frames, talking about like the daily chart, etc. And again, while this thing totally could keep going, I personally think the risk to reward is a little more attractive if we do get a steeper pullback. I'd also be waiting for it to show up on the top setups page on the Edge Finder, which calculates score based on several different market components, everything from labor statistics, inflation data, economic trends, the overall market momentum, seasonal seasonal trends, retail positioning, commitment of traders data, and interest rates. The software pulls in all that data, and I'd like to see some confirmation on the indices before I get long them myself. This is why it's been kind of easier for me to stay long gold and the euro, both of which I have positions on, because again, I'm getting some confirmation from the software. Recently, we've seen a little bit of shift in the Fed Watch tool, which gives us an idea of what markets are thinking for rate cuts or rate hikes, but we're past rate hikes, at least from the Fed's mouth. What we see here is that the May meeting is expected only a 12% chance of actually seeing rate cuts. It now seems much more likely that the first rate cut will come as soon as June. That's kind of the base case. And then also perhaps even July, depends on what we see in the upcoming data. This number, of course, changes based on economic data. So for anybody who thinks fundamentals don't matter, they do. They are very much impacting what the financial market is seeing, and how prices are moving are very much correlated to what the data is coming in and showing. Remember, softer economic data will maybe encourage the Fed to say, hey, maybe let's go ahead and relieve some of the tension and cut rates sooner, whereas if economic data stays hot, it could push it back into the future further. Just a quick history lesson. Towards the end of last year, we saw the stock market absolutely tear to the upside. And just to prove my point on how important fundamentals are, the reason this teared to the upside was because there was suddenly higher expectations due to some of the data coming out that the Fed would begin cutting rates sooner. In fact, during this time, many participants thought we could see a rate cut as soon as March. Of course, that is not likely to happen here. And instead, we've continued to push on anyways. And this is why, for me personally, I think we're due for a little bit of a pullback. Some of the hype, some of the momentum could be starting to wear off, and we may be due for a little bit of a reality check that rate cuts may come off of the back of slowing economic data, which is not as attractive. If the economy starts to cool or show signs of a potential recession, that's not as exciting as the economy's still strong, but inflation's coming down. We've sort of lost that story in there. And so for me personally, I think that that could be the catalyst, the narrative shift that causes a bigger pullback in the indices. By the way, that's the same narrative that can continue to bolster my gold trade. So that's why I'm positioned a little more focused on gold right now. I also want to show you guys a really cool trick that you can do to access the gold to silver ratio. What I've done is you can type this into your trading view the same way, XAUUSD/XAGUSD. This is the gold to silver ratio, and it's a very useful indicator if you're somebody who trades metals. Let me show you what this comes out to look like. So what we've done here is we've basically just put the price of gold relative to the price of silver. And what this is actually telling you is the number of ounces of silver that you would need to exchange for 1 ounce of gold. And historically speaking, during all of the great market runs for metals, meaning when things get very, very bullish for metals, we actually see silver start to outpace gold. So if you're somebody who trades gold right now and you're watching it very closely, I think you need to really pay attention to silver. During all of the periods where we see metals, again, run very strong, we usually see silver lead. Here was post-pandemic when people were really concerned about inflation. They started rushing into metals. We saw silver, we saw the gold to silver ratio go from, at one point, a price of 125 ounces of silver to get 1 piece of gold, meaning silver was very cheap relative to gold, to suddenly silver exploding in value relative to gold and coming down to at one point like 64. That price got cut in half. So the point here is that this is actually a repeatable feature that happens to the gold to silver ratio. Here is 2008, which many will remember, or who know their history in markets know that during this time metals went crazy, and during this time silver actually massively outperformed gold. That's why the gold to silver ratio came down hard. So keep an eye on silver. It is a very important component, I think, to a true metal market run. If you're going to see gold's momentum continue, we want to start seeing this thing roll over and actually silver outperform. If silver leads, it is a healthy sign, in my personal opinion, for the metal market bull crowd that's out there, like myself. And here's a look at all of my current positions: my gold position, my GDX, which is the gold miners, SLV, which is of course silver, XLY, which is consumer discretionary, which I sold puts on and looks to be like it's going to expire worthless here in 2 days. FXI, which is the Chinese stock market, I have bought position and I've also sold calls. Overall, we're up $3,200 on that trade. If you'd like to trade options, ETFs, and actually now futures, they actually added futures to WeBull. This broker is really leveling up. If you don't already have access to WeBull, there is a link down below in the description. It is a referral link, and if you choose to use it, you'll be supporting my channel and you'll get some free shares when you sign up. Also, if you're not in the US, there's some other brokers linked down below that might be the right one for you. And by the way, all of them, we've set up cool deals with each one to give you guys, my audience, some special sign up perks. So check them out down below in the description and get yourself some free stuff. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.